Good day all. Ira Epstein of Linn Associates with your financial market wrap-up for this Tuesday, the 3rd of December, 2019. And I haven't been back in the office since Wednesday to speak of. And unfortunately, I'm buried. So the time is now 5:30. We're already into the Wednesday trade session. So these are prices that will start your Wednesday trade, and I apologize for that. But in any case, you're getting a little more of a bounce in the stock indices tonight. Metal markets are down a little after the gains. The event of the day, and I call it a singular event, was President Trump talking about no deal with China. And that immediately crashed the stock market, took it, well, crash isn't the right word, but took it down about 1.5, 2 percentage points. Market has come back since then, kicked up the gold and the silver as you scared people. And remember, people are just getting back from the holidays, so you have to understand that. Now, the impeachment, yeah, you know, if you saw what was coming on, are any of us surprised it's going on to the Judiciary Committee and that this is going to be pretty much a slam dunk that they will, at the House at least level, vote to impeach the president? What happens in the Senate, that's a whole different story. But as more information comes out and people find out more, especially about Rudy Giuliani, there's problems for the president there. Can he overtake it? I think that's not going to be a question, but that's what I'm thinking right now. I don't know all the info. When we go to the S&P 500, you can see how the market is backed off. So we had a continuous run, and we're in a bit of a correction. Okay, market's down about 50 points right now for the week. When we take a look at that break, you can see how the market has been doing. If I just go up here, this was Friday's action. And you remember, markets were open half a day, blah, blah. The markets then had an outside day down. If you learn anything, outside days are important days in charts. They give you an idea, number one, the markets run into something important. Number two, you have to always look to see where the swing line is. From there, the market corrected even further, and this is what the chart now looks like. Now, I'm going to come back here because I want to come one more day. You get the break. You see you took out these levels, and now this is where you're at tonight. So what the market effectively did is it stopped that uptrend, came back down. Do I think this is like December of last year? I don't. Number one, the Fed has the markets back. Number two, it's not an Apple deal that's going on. Number three, we're still in a negotiation period. We don't know that what President Trump is saying is a negotiation tactic or is it actual. Does he really mean come December 15th it's all over? Or is he going to say, no, substantial progress was made right at the end and the market looks at that favorably? I don't know. Nobody knows. I don't know if the president knows. But you look at it, you see what's going on. In terms of being a chartist, well, the market lost its way. Now the question is the resistance on bounces back at the 3112 level, the 18-day average of closes. We have a bigger 100-day average all the way down here in the 200. Now the question is, of course, if something disastrous happened, anything's in play. But where was the other support in the market? And if you're a morning subscriber video, I was talking about potential support. And if you've ever taken my charting course, which I'm offering for free, this Cyber Week, you'll understand that when I come right at the end of this, you'll get an idea of what I'm talking about. But here we are, and look where the Bollinger Band comes in. So I think the pros came out against the upper Bollinger Band, the first challenge of it, and I think they came out today on the first challenge of the lower band. And I think the market is trendless. You have a higher high, a lower low, and in momentum, you're still pointing down. You are not in oversold territory. So yes, this market can still go down, get through that number. There's no magic there, but the first challenge of it is often a support area, especially if you're not super narrow in the bands. You're a little bit wider, which you are. When we come to the NASDAQ, let's come back here. Here's the market on Monday. I wasn't here yesterday. But what did the market do? You have a higher high, lower low pattern. You pulled back to neutral. Momentum turns down on you. If you break, this is one of the potential support zones. You tell me where you want, and you're getting your little bit of a bounce tonight. I'll teach you how to do all this in my charting course. In the Dow, You tell me what happened. Outside day, down. Went back to the neutral part. You have a higher high, lower low on the close of business yesterday. Momentum is turned down. I'm not bullish or bearish. The market is now out of the uptrend. Today the market falls, gets to the lower Bollinger Band, and you're getting a bounce away from it. What about in the Russell? The Russell's different. It's been acting different the whole year. It doesn't rally with the rest of the market. It doesn't go up to the new all-time highs. It's had divergence all the way through. It's still got the lower low, the higher high, and it's stuck at the 18-day average. These other indices aren't. They're far away from it. So it's a bit different, and I've been saying that. Now, I wouldn't be surprised if the pros get a little more courageous and start in the VIX cash writing some calls up here. I don't think they did it in front of NATO. Now that you got the NATO meeting and the president has said what he's going to say, he wasn't going to go there and not be a bull in a China shop. When is he never not a bull in a China shop? So the first thing with France, they're going to put the digital tax on. Hello, President Macron. Here's what we're going to do. LVMH, if you will, handbags, wines, cheese. Let's tax those goods if you're going to do this to us. That was the greeting, right? And the market, of course, reacted accordingly. Now I'm wondering, because you didn't stay up dramatically in this market, you finished at 1596, up over the 100-day average. I'm wondering if the pros aren't coming in there a little bit and writing some calls. It's always more dangerous at these levels. That's what I've been saying. I wish I could use the word always. It isn't right. I've been believing it's more dangerous to write calls at the 14, 15 level than it is to write puts when you're down to 11, 10, those levels. If you take a look at the bonds, higher high, lower low. Now very soon, DEES is going to go off the board. We'll be looking at the March, but you negated the down momentum it was trying to build. You had a lower high, lower low, went into a pattern where you finished at 158.6 yesterday, under the 18-day average of closes. That was bearish. Today you negate the whole bearish move by getting back over this high, but you're instantly overbought. And if it follows through, I'd be looking for big resistance at 161.27. In the note market, you got up to the key resistance. First the 100-day average, and then the Bollinger Band's right above it, overbought. And again, you negated the downtrend in the market. When we come to TLT, all you did in this market, if I can get it to come in for me. Here, let me go one more. There we go. This should do it now. You've got higher highs, higher lows. This is the number you don't want to take out. There's nothing bearish on this chart, unlike what the futures did. Now the market gets down, finishes right at 138.31 over the 18-day average of closes. It certainly has lost its way. It's got a higher high, lower low, into that main support area, that line in the sand, and today you get the president talking, and of course you negate all that. You talk about a mess on charts, the interest rates are there. Dollar index. In a very brief, now look at this. This is Wednesday. This is Thursday. I realize you're going to say, Ira, how could it be Thursday? It was. Markets trade electronically. And even though we're not necessarily here, they're doing that. You get up to the Bollinger Band on Friday. That's where I think pros come out. You then start dropping in the market yesterday. You go down right through the 100-day, through the 18-day average to the 100. If you extend, I'm looking for support at the Bollinger Band, but I'm already in a zone that I think the shorts are looking to cover. And today you got right down to that number. But just think about it. You're moving 100-point increments in no time at all right now. Very difficult trading. Eurocurrency. You got down last week to the area where I think, and this was Friday's number, where you had lower highs, lower lows. What I teach in my charting course is the first challenge of a Bollinger Band is not a reversal point. It is a point where I think whenever you hit it, if you're going down, that's where I think pros are going to take some money off the table. Go up, that's where I think they'll do the opposite. You started your rally, you tell me what you're doing right now. I would expect resistance up at that number. British pound in an uptrend. This sideways action has more bullishness about it than bearishness. The market's got the higher lows, higher highs. It is overbought, so it's at a resistance zone. And what it's trying to do is lift out the upper Bollinger Band. Well, do I think the pros are buying into this overbought condition? No, I don't. I think they're coming out of the market, but the market looks more bullish than bearish. In the Japanese yen, the first challenge of the lower Bollinger Band happened right through here last Wednesday. You'd been in a lower high, lower low configuration. The resistance now at the 18-day average, if you bounce, I don't know if you will, you're oversold. This is Friday. Market starts up yesterday with a big reversal day. You know what I'm going to say. You get a reversal, always be careful. Until that low's taken out, this market's trying to catch some people in this area, and that's basically what it did. The good news is the market didn't take out these highs. A close back under that 18-day average is going to look a bit bearish, believe it or not, but you've got divergence. You have momentum up, the swing line down. Don't see anything there. Bitcoin. And this is the December contract. Higher lows, higher highs. However, that's negated because you're under that line in the sand, the 18-day average of closes. I'll call this market out of its downtrend, but not in an uptrend. Momentum corrected an oversold condition. It was embedded. It still owes. That means the idea that price and the 18-day average can still come together have a greater probability than not occurring by a lot. So I'm still looking to see if that can come. In the Feb Brent versus WTI crude, it's time to move to the Feb contracts. And as you can see, they got up here into the 530 zone. They've recently been correcting. They're 483. That's the differential between the two. And if you take a look at the chart action, you've got lower highs, lower lows. There's a lot of support under the market at the 59.90, that's the 100-day average, to the lower Bollinger Band. In addition, why would you want to put yourself at risk with any energy minister that's the OPEC plus meeting right now? They come out and they say whatever they want. It's not like you get the normal statements out of these meetings. Today, Iraqi minister was talking for another 400,000 barrel a day cut. That would take the cut in the production from 1.2 to 1.6. Russia apparently doesn't want to do it. And the problem is Iraq's just getting in compliance. So for this whole 6-month period, they haven't been in compliance, but now they want to see more of a cut. Who's going to do it? I'm not saying it won't happen. I'm saying they haven't been the ones meeting it. When you take a look at what's going on in the WTI, you've got the pattern here where just because of today, you got the higher lows, higher highs. You have an outside day up today. An idea that this market's failing on the upside would be taking out the low of an outside day up tomorrow, which is already showing here. Remember that we're into tomorrow's trade, or the day after. But downside, 55.19.07 looks pretty solid. In the gasoline, trend down. Lower highs, lower lows. Oversold, hit the 100-day average and found its support. It hasn't hit the Bollinger Band, but it doesn't have to when it's oversold. It's already hit a key average, so I pay attention to that. Nat gas. The market's now waiting for a big wave of cold weather. Now, the National Weather Service is saying starting in about 5 days, we're due to get and stay very cold through the Midwest and going out east. So that's creating a big bounce in the market. You got to be careful. You lost the embedded reading. When you lose an embedded reading, it is not uncommon for price to make a run at the 18-day average of closes. So that's what I've got my eyes on. As I told you, for me, this is the beginning of my Cyber Week sale. And what I've decided to do, and I've never done this before, buy a 1-year subscription to any of my research services, and I'm going to throw in my charting course for free. It's $179.95 on our website, so you can go check that right now. I'm going to teach you to do exactly what I do. It's all video based, so you're able to see what I do, then you do the same thing, and admittedly, it's older data. Then in the mornings, I bring you up to date with your subscription, ideally, into the morning video, and you get to see how to work with window envelopes, something I don't show here. Bollinger Bands. By the way, I want to go back to window envelopes. To me, they're a key element when you're looking, be it the market to the upside or downside, for resistance points and places where I think traders take some money off the table. Swing lines, moving averages, all the slow stochastics, as I said. And when you're doing this, it's 54 videos, so it's going to take you a little bit of time. Not a lot, But there's 54 videos. As I said, you have my market research, a trial up to our charting software. If you haven't had it before, you will get one of them. You'll either get our web-based or you'll get our Java-based. The idea is I want you to be able to follow with what we've done. So as I said, any of our yearly research, 1 year of that, you get this for free. To give you an example, if you bought the video, 1 year of it's $156. You get the course for free. So you're getting more than you're paying. That's how I'm looking at it. How do you find out more? Go to our website, www.iraepstein.com. Under the word research, you'll see it. If you want to learn more about the charting course, go into the word education. It's there. You can always call our staff in the morning. In the meantime, I'm Ira Epstein. Thanks for watching. I appreciate much of the sympathy that you expressed to me about the loss of my mother over Thanksgiving. I'm back in the office. Let's get on to the markets. You have a good day.